That angle's pretty good, right, guys? Hello, everyone. Again, this is Ethan Shapiro, the climate change realtor, founder and manager of the most innovative real estate corporation ever conceptualized, here for Principles episode 18. And we left off at point 5.4, navigate levels effectively. So Ray's asking us to navigate levels effectively, and I don't know what that means, so let's continue on to letter A. Use the terms above the line and below the line to establish which level a conversation is on. Above the line and below the line to see what level a conversation is on. What is the line, and what are these levels he's talking about? And so let's go back, because we're in number 5. Learn how to make decisions effectively, and then universal rules for good decision making. So we're learning how to make decisions here, and he's talking about some sort of line. I don't know if it has to do with like the emotional line, like if someone's like the way someone feels about something, or when he's talking about these levels. So is it levels of intelligence, levels of emotion, levels of people's personal connections to what you're talking about? I can't say for sure, but I think we'll get some more insight as we continue on through these points. So letter B, remember that decisions need to be made at the appropriate level, but they should also be consistent across levels. So maybe he's talking about positions in organizations or something with these levels. So navigate levels effectively. What levels is he talking about? Is he talking about levels of importance or levels of authority? Navigate levels effectively. So this is going to be an interesting episode, because we really don't know what we're talking about here. So here's a note underneath. Diagram the flow of your thought process to increase the ability for synthesis. Assistant across levels. So that means decisions you're making should be consistent with level, what is like, so level 1 of the video game would be like the easiest, level 8 would be like the hardest, and then you like save the princess. It's like level 8 or whatever. So I guess the most important would be like the high. Okay, so the higher level is that like cognitive thought, and then the lower level. Okay, remember the discussion about the higher level you and the lower level you. So the lower level you is your subconscious and your emotions, and the higher level you is your rational decision making process. So make sure. Okay, so navigate levels effectively. I'm just spitballing here. I'm not sure if this is what he means, but remember, we want always for the not the objective, for the conscious mind to be in control. So even though over the last few weeks, and not even the last few weeks, I've been fine. I've just been busy. But having my logical mind be in control when I feel like shit is super powerful, because what I'm going to do is, even though the draw is for me to just lay there and do nothing, my logical mind will push me to do something to get me out of the rut. And I can see why a lot of people stay depressed all the time, because it's easier. Once you start getting upset, you're getting pulled into the darkness, and it's easier to just relax and let it happen. But what you should know logically is that when you're upset, you want to fight back and take effective action to get you back to where you were before you were upset. So I think of an example. I'm rewatching all my old videos, and in my fourth podcast where I talk about my personal story, is the darkest moment of my entire life. I was like, I was in like emotional pain. I couldn't, like, it was so strong that I could feel it. Like my heart was racing. I was so upset. But my logical mind pulled me into a gym. And once I got into the gym, I got in the leg press machine, and boom. And then all of a sudden, all that energy that's like pulling you down is now pulling you forward to become stronger, to feel healthier, get those endorphins flowing and making you feel better. So we're talking about levels. So yeah, we want to, thinking at the highest level, thinking as God would be knowing everything objectively and doing everything right, is that theory of what God is, right? So that would be the highest level. The lowest level would be being a sheep and just letting someone control you with your emotions. So it's like, oh, you're an idiot, man. Like, why didn't you just do this? And you're like, oh, he thinks I'm an idiot. I better do what he says. And it's like, that's like lower level, like being controlled by like your emotions, and having people be like, oh, you're so lame, bro. Just jump over the fence. We're going to go break into the school at night. Like, let's just do it, man. Don't be a loser. Like, listening to someone like that, and that would be like letting your lower level you control you, when logically, it's probably not a good idea to do something stupid like that. So that's what I'm thinking. So that was 5.4. It wasn't very good. Let's do 5.5. Yeah, and then we'll call it ABC, and then we got 5.7, 5.8, 9, 10, 11, 12, and then that's the end of the book. So we'll get on to how to win friends and influence people after that. So 5.5, logic, reason, and common sense are your best tools for synthesizing reality and understanding what to do about it. So I didn't read that yet, but I was just talking about that. That's your higher level you. You know, I'm a determinist. I don't necessarily believe we all have free will, but at the same time, you want to make sure that you're making decisions based on what makes sense, not okay. And I'm always like, follow your gut, and then I probably contradict myself so many times throughout this show, but you can think about something logically, and then if it feels right, then that's when you know you should do it. When you have like an ethical dilemma, you're not sure what to do. I probably would say to actually lean towards emotion in that case, but we're talking about logic. Let's read this one again. Logic, reason, and common sense are your best tools for synthesizing reality and understanding what to do about it. So instead of feeling out like, oh, I feel like I'm going to make $1 million this year. If I just wake up and I just smile and knock on their door, I'll get $1 million. You need to take in information like last week, analyze the data, figure out what decisions have you made now and how can you improve them to have more success moving forward. And then you analyze and you figure out what are your strengths, what are your weaknesses, what were you doing right, what were you doing not necessarily right or wrong, but what were you doing that could be improved? And then once you improve it, what kind of results are you seeing and how can you create more of that? So letter A, make your decisions as expected value calculate. Oh, wait. Oh, okay. So actually there's nothing under 5.5. So now we're at 5.6. Make your decisions as expected value calculations. I love this idea. So when making investments. So if you guys go back to one of my older videos, my margin of safety, my favorite book of all time, the idea of having a nice margin of safety. So worst case scenario, you make $1. Best case scenario, you make $10,000. Most likely case, you make between $5,000 and $6,000. So that's like expected value. And this is how investors become very, very wealthy, is they don't buy things unless there's a very nice margin of safety. So when I talk about buying a wedge deal in a property, if you can go onto the public record or go on Zillow or whatever and get a valuation on the house and see it's worth $600,000 and it's selling for $575,000, that's a pretty nice margin of safety for you to get in. And then in addition to that, you can go in and add value to the house and increase it up. So that would be a good thing to do for investing. And you have an expected value on the property of 600. Let's say the market tanks and it goes down to then the house is worth 580. But remember, you bought it for 575. So the worst case scenario, if we have another 2008, you're still $5,000 up. So that's something, a little unexpected value. So letter A, raising the probability of being right is valuable no matter what your probability of being right already is. So yeah, I think that just says to like being knowledgeable and understanding what you're doing will make it more likely that you're right. So if I'm not going to sit here and talk to you guys about margin of safety and investing in securities. I do know more than most people about investing, but someone like Ryan Johnson or Noah Shields, my two friends, would know a lot more about securities investing. So I'd probably send you to talk to them. But then I'd also be very skeptical of anyone talking about securities because securities are stocks, which is because it's very confusing and a lot of people have different theories about how to do things. Even like my two biggest mentors who I watch all the time, Graham Stephan and Meet Kevin, just had an argument this week about dollar cost averaging versus like lump sum investing in the market. So that can get really tricky. But I think real estate's a lot easier, more simple. You can touch it, you can feel it, you can see it, and the market moves a lot slower than the stock market does. So that's just some thoughts on that. Raising the probability of being right is valuable no matter what your probability of being right is. So if you have a 10% chance of being right and you can raise it to 15, that's always a good thing. I agree. I'm looking back at the old videos where I was just like scrutinizing every point, and it makes a lot more sense for me to just kind of go with it and then give some like personal anecdotes, and then we'll get the next video series will be good. So letter B, knowing when not to bet is as important when knowing what bets are probably worth making. All right, so we are talking about securities today. I mean, this is Ray Dalio, the hedge fund investor, so we have to talk about securities. You don't want to just dump your money into something just because you have money. What you want to do is buy smart investments with a high margin of safety. So if the market, like it is this week, is at an all-time high, it doesn't necessarily mean you want to get in, but that could also possibly be the case. The idea is buying things undervalued, buying the house for $575, knowing it's worth $600. This is the key to becoming wealthy, is buying a dollar for 50 cents. I talk about this all the time. Oh, you can't do that, man. It's not impossible. The market's super efficient. Is it? Is it efficient? When Elon Musk smokes pot on Joe Rogan and the stock drops by 30%, is that efficient? Maybe it wasn't 30%. Is that an efficient pricing on a company? When I use the example of Jeff Bezos has a heart attack, is that really an efficient way to judge a corporation, one person? I guess they're the leader and they're important, but really 30%, when you see the market go up and down, fluctuating 10% over every month over 3 months, is that efficient? Is the company really worth 20% less last month? Like, come on. There are undervalued assets you can buy all the time. Have you ever heard of the concept called arbitrage? You go to a store and buy something that's on sale and sell it on eBay for more money. If someone lives in Texas and you're in Colorado and you go and find a product for less money, that's an undervalued asset too. What it's worth on the market is not what you're buying it for. You're buying it for less. These things are real. Anyone who says that you can't buy undervalued things, that everything's priced effectively, is a moron. I don't know what else to tell you, because people have become billionaires by doing this for decades. But the key of this point is to know when not to spend your money. You want to wait for opportunities like arbitrage moments or undervalued assets. You want to wait, and then you want to put as much money as you can into something with a nice margin of safety will be, worst case scenario, you'll make $5,000. Best case scenario, you'll make $50,000. That's what we've been talking about today. Letter C. The best choices are the ones that have more pros than cons, not those that don't have any cons at all. So that's interesting. We're going to wrap it up here. That's letter C under 5.6. That's the last one for today. I suppose, yeah. So that's a theory by Ray. I mean, he's made a lot of money investing in securities and helping manage other people's money. So he's saying rather than having, right. So this is the idea of buying something that has a bit more risk but higher return versus buying something that has no risk and low return. So for example, you can put all your money into an S&P 500 index fund and make 8 to 12% over 30 years, and you'll be good with that. But Ray is saying you shouldn't do that. What you should do is buy Apple stock or Facebook stock, knowing that, yes, it could go down a lot, but it could go up a lot. And now I'm not doing a great job of talking about this, but let's read it again just to be fair. The best choices are the ones that have more pros than cons, not those that don't have any cons at all. Because, if you have moderate risk, you're going to have moderate return. If you have high risk, you'll have high return. But you can mitigate that risk by understanding the inefficiencies in the market of stupid things like Elon Musk smoking pot having nothing to do with Tesla at all, but tanking the market. So that might have cons like, oh, it could keep going down. Tesla's so volatile. I'm not telling you to invest in Tesla. And this was back when Tesla was like in the hundreds, and now it's up at like 600. If you believe in the company, understand the fundamentals, and then the key was that the management, people were like, oh, if he's smoking pot, like, so stupid. But I'm not gonna condone this point, but I do believe in the margin of safety and undervalued assets, as I spoke throughout this whole episode. How's everybody doing? Yeah, I'm back. And expect me to, I'll be going down again. It just, your emotions fluctuate, and you have to be ready for that in business. You have to be ready for things to go poorly. You have to be ready for things to go well. You have to be ready to stay happy, stay positive, and stay frosty. I love you all. This was Principles episode 18. Only 2 left, and then we'll probably do like a review video at some point. But thanks for watching, Have a fantastic day.